It's not a gimmick, it's not a trick, it's a single, powerful question that most Americans never think to ask. And your insurance company? They're not always going to volunteer the information. I've been helping people navigate the often confusing and expensive world of personal finance. Car insurance is one of those necessary evils we all pay for, but very few of us truly understand. We sign up, get our insurance cards, and then just let the automatic payments roll out month after month, year after year. As the rates creep up, we sigh, maybe complain a little, but we accept it as a fact of life. But it doesn't have to be that way. The power to lower your bill is already in your hands. You just need to know how to unlock it. By the end of this, you will be armed with the knowledge to confidently march into a conversation with your insurance agent and take back control of your hard-earned money. So grab a notepad and let's get started on this journey to a lower car insurance bill. The million-dollar question that costs you nothing to ask. So, what is this magical, all-powerful question? It's surprisingly simple. The next time you talk to your insurance agent, I want you to look them in the eye or speak clearly into the phone and ask, "Can you walk me through every single part of my policy, line by line, and explain what I'm paying for? Then, can you review every single discount I'm eligible for to make sure I'm not missing out on any savings?" That's it. That's the question. Okay, I know what you're thinking. That's not one question. That's two, and you're right. But it's one single, focused conversation. It's the key that opens the door to a complete and total review of your policy. It signals to your agent that you're not a passive customer anymore. You're an engaged, informed consumer who wants the best value for your money. This question is powerful because it forces a comprehensive review. It's not just about one discount or one type of coverage. It's about everything, all at once. And the savings are often found not in one big chunk, but in a series of small adjustments and discounts that add up to a significant amount. So, let's break down exactly what you should be looking for when you have this conversation. Part 1. Deconstructing your car insurance policy. Your car insurance policy isn't a single thing. It's a bundle of different coverages, and you can customize how much of each you have. Understanding these components is the first step to finding savings. 1. Liability coverage, the bare minimum. This is the one part of your insurance that's legally required in almost every state. It covers damage you cause to other people and their property. It's broken down into two parts. Bodily injury liability pays for the medical bills, lost wages, and pain and suffering of people you injure in an at-fault accident. Property damage liability pays for the repairs to the other person's car or any other property you damage, like a fence, a mailbox, or a storefront. You'll see this written as three numbers like 100, 350ths. This means $100,000 in bodily injury coverage per person, $300,000 in bodily injury coverage per accident, $50,000 in property damage coverage per accident. Your action plan for liability coverage. Ask your agent, is my liability coverage at the right level for my financial situation? The savings secret. Most people just get the state minimum to be legal. This is a huge mistake. If you cause a accident, the state minimums, which can be as low as $15.00 for property damage, will be exhausted in a split second. The other party can then sue you personally for the rest, putting your savings, your home, and your future earnings at risk. The smart move. You might think I'm going to tell you to lower this to save money. The opposite is true. You should have enough liability coverage to protect your assets. The good news, increasing your liability coverage is surprisingly cheap. Going from 50, 125ths to 100, 350ths might only cost you a few dollars a month, but it gives you exponentially more protection. For high net worth individuals, if you have significant assets, ask your agent about an umbrella policy. This is an extra layer of liability protection that kicks in after your auto and home insurance are maxed out. It's a very cost-effective way to protect your wealth. Point 2. Collision coverage for your car. This coverage pays to repair or replace your own car. If you're in an accident with another vehicle or object like a tree or a guardrail, regardless of who is at fault, your action plan for collision coverage. Ask your agent, given the age and value of my car, does it still make sense for me to have collision coverage? The saving secret: collision coverage is one of the most expensive parts of your policy. As your car gets older, its value depreciates. At some point, the cost of the coverage may be more than the car is worth. The 10% rule: a good rule of thumb is this: if the annual cost of your collision coverage is more than 10% of your car's blue book value, it might be time to drop it. For example, if your car is worth $1,000 and your collision coverage costs you $500 a year, that's more than 10%. You might be better off saving that $500 a year in a dedicated car repair fund. Your deductible: this is the amount you have to pay out of pocket before your insurance kicks in. A lower deductible like $250 means a higher premium. A higher deductible like $1,000 or $2.00 means a lower premium. The smart move: ask your agent to quote you the price difference for raising your deductible from $500 to $1,000. Often, the annual savings are significant. Just make sure you have enough cash in your emergency fund to cover that higher deductible if you need to. 3. Comprehensive coverage for everything else. This is another optional coverage that pays to repair or replace your own car if it's damaged by something other than a collision. This includes theft, vandalism, objects like a tree branch, natural disasters, hail, floods, hurricanes hitting an animal like a deer. Your action plan for comprehensive coverage: ask your agent the same questions as for collision. Does my car's value justify the cost of this coverage? And how much can I save by raising my deductible? The saving secret: just like collision, comprehensive coverage is tied to the value of your car. You can use the same 10% rule to decide if it's worth keeping. The smart move: comprehensive is often much cheaper than collision. Many people with older cars will drop collision, but keep comprehensive. This protects them from a total loss due to theft or a natural disaster, which are often non-negotiable events. It's a good compromise, and just like with collision, raising your deductible can lead to immediate savings. For uninsured, underinsured motorist coverage: protecting yourself from others. What happens if you're hit by someone with no insurance or not enough insurance to cover your bills? That's where this coverage comes in. It protects you and your passengers. Uninsured motorist kicks in when the at-fault driver has no insurance at all. Underinsured motorist kicks in when the at-fault driver has insurance, but not enough to cover all of your medical expenses. Your action plan for UIM: ask your agent, do I have this coverage? And do the limits match my own liability coverage? The saving secret: some states require this coverage, but in others, it's optional. Do not skip this coverage. The Insurance Research Council estimates that about 1 in 8 drivers in the United States is uninsured. That's a risk you don't want to take. The smart move: the best practice is to have your UIM coverage limits match your own liability coverage limits. If you've decided you need $100,000 in bodily injury liability to protect yourself, it makes sense to have that same amount of protection in case someone else hits you. This coverage is typically very affordable. It is one of the best bangs for your buck in all of insurance. 5. Personal injury protection: PIP, or medical payments. MedPay. This coverage pays for your medical expenses after an accident, regardless of who is at fault. PIP required in no-fault states. It's more comprehensive and can cover not just medical bills, but also things like lost wages and rehabilitation services. MedPay available in other states. It's less comprehensive and typically only covers medical bills. Your action plan for PIP, MedPay: ask your agent, given my health insurance coverage, what level of PIP, MedPay do I really need? The saving secret: if you have a good health insurance plan with a low deductible, you may not need a high level of MedPay. Your health insurance will cover your medical bills after an accident. The smart move: review your health insurance policy. If you have great coverage, you might be able to select a lower level of MedPay or PIP, which will reduce your premium. However, be careful. MedPay can cover things that health insurance might not, like ambulance fees or dental work needed after an accident. It also pays out much faster, without the need to prove fault. Don't just drop it without understanding the consequences. Part 2. The treasure trove of discounts. Now for the fun part. Once you've right-sized your coverages, it's time to hunt for discounts. Most people are leaving money on the table here. When you ask your agent to review all available discounts, here are the ones you should be listening for. Driver-based discounts, safe driver discount, the big one. If you have a clean record with no accidents or tickets for the past 3 to 5 years, you should be getting a significant discount. Good student discount. If you have a high school or college student on your policy who maintains a B average or a 3.0 GPA or better, this can be a huge saver, sometimes up to 25%. Defensive driving course discount. Many companies offer a discount for completing an approved defensive driving course. The cost of the course is often less than the discount. You'll receive low mileage discount. Do you work from home? Have a short commute? If you drive less than the average person, usually under 7,500 or 10,000 miles per year, you're a lower risk and you should be paying less. Ask about a telematics program like Progressive's Snapshot or State Farm's Drive Safe and Save that tracks your driving habits and can earn you a discount based on your actual mileage. And Safe Driving. Affiliation/occupation discount. Are you a teacher, a nurse, an engineer, a first responder, or a member of the military? Do you belong to a certain alumni association, a credit union, or a club like AAA? Many insurers have partnerships with these groups and offer a discount. It never hurts to ask. Policy-based discounts. Multi-policy bundling discount. This is one of the easiest and most significant discounts if you have your auto insurance with one company and your home, renters, or life insurance with another. You're throwing money away. Bundling them with the same company can save you 10 to 25% on both policies. Multi-car discount. If you have more than one vehicle on the same policy, you should be getting a discount. Pay-in-full discount. If you can afford to pay your 6-month or 1-year premium all at once instead of in monthly installments, most companies will give you a discount. They save on administrative costs and they pass those savings on to you. Paperless billing, autopay discount, a small but easy discount for getting your bills via email and setting up automatic payments. Vehicle-based discounts, safety features discount. Does your car have anti-lock brakes, airbags, daytime running lights, or an anti-theft system? These are all potential discounts. Make sure your insurer knows about every safety feature your car has. New car discount. If your car is less than 3 years old, you might be eligible for a discount. This is not an exhaustive list. Every company is different. That's why it's so important to ask the question, are there any other discounts I could be getting? You've got nothing to lose and everything to gain. Part 3. Shopping around. The ultimate power move. After you've had this conversation with your current agent and they've optimized your policy, your work isn't done. Now you have a perfectly tailored policy quote. This is your baseline. The final step is to take that exact same set of coverages, 100, 350 its liability, $1,000 collision deductible, etc., and shop it around to at least 3 other insurance companies. Insurance pricing is incredibly complex. Every company uses its own secret algorithm, and they all weigh factors differently. The company that was cheapest for you 5 years ago may not be the cheapest for you today. The only way to know for sure is to compare. Use an online comparison tool. Sites like the Zebra or Insurify can be a good starting point to get multiple quotes at once. Talk to an independent agent. An independent agent can shop your policy around to multiple carriers on your behalf, saving you time and potentially finding you a better deal. Go direct. Don't forget to get quotes directly from major carriers like Geico, Progressive, and State Farm. When you get your quotes, make sure they are for the exact same coverage. You're doing an apples to apples comparison. You might find that your current company is still the best deal. Great, you've done your due diligence and can have peace of mind. But you might also find that another reputable company is offering the same coverage for hundreds of dollars less. If that's the case, it's time to make the switch. Alright, we've covered a lot of ground. You are now more informed about car insurance than 99% of the population, but knowledge is only potential power. Action is where the real power lies. Here is your mission, should you choose to accept it. Find your policy right now. Go find your car insurance policy declaration page. It's the document that lists all your coverages and their limits. Schedule the call, block out 30 minutes in your calendar this week. Title it Save Money on Car Insurance. This is an appointment you need to keep. Make the call, call your insurance agent, be friendly, be confident, and ask the question, I'd like to do a full review of my policy. Can you walk me through every coverage I have and then review every single discount I'm eligible for? Take notes as they go through your policy. Use the information you learned here. Ask questions, challenge things. Do I really need that much coverage? How much would I save if I raised my deductible? I'm a member of Alumni Association. Is there a discount for that? Shop it around. Once you have your optimized quote, thank your agent and tell them you're going to do some comparison shopping. Then, get at least 3 other quotes for the exact same coverage. Make your decision. Choose the company that gives you the best value, not just the lowest price, but the best combination of price, coverage, and customer service. That's it. It's a simple process, but it's one that can have a massive impact on your budget. Don't put this off. Every day you wait is a day you might be overpaying. You work hard for your money. It's time to stop giving it away unnecessarily. Take control, ask the question, and start saving. I hope this has been helpful. If you've managed to save money using this method, please share your success story in the comments below. Let's help everyone stop overpaying for car insurance. Thanks for watching and drive safely.